If STK had a great 2023, I wouldn't bother mentioning it. Any tech fund weighted towards the Magnificent Seven had a great year. But two things separate this tech fund from others. Number one, it pays a consistent yield of more than 5%. Most tech funds pay nothing or almost nothing. And secondly, 2023 wasn't a fluke. STK has been delivering huge returns for over a decade. It delivered a higher total return than the S&P 500 and the NASDAQ 100 over the past 5 years and over the past 10 years. After yet another solid year, it's time for an STK update. Did you buy Lam Research? Have you even heard of Lam Research? Most tech companies had a good 2023, but Lam Research had a particularly good year, outpacing Google and Apple by returning just under 90%. And it wasn't a lucky year. Lam Research has been beating Google and Apple over the last 10 years. I've never heard of Lam Research until I looked into STK's holdings in June of 2023. It was and still is their biggest holding. I don't think Lam gets much media attention because the semiconductor equipment business is a bit difficult to understand. They make the machines that make the chips that make cool technology. The distributions for Columbia Seligman Premium Technology Growth Fund, ticker symbol STK, are mostly flat because since this fund was created in November 2009, the regular distributions have been managed to always equal 46.25 cents. The 5.85% yield doesn't tell the whole story because STK also issues special distributions. These are paid out when the capital gains are unusually high. If you were lucky enough to own this fund in 2017, 2018, 2021, 2022, or 2023, you scored some juicy special dividends. As I record this, STK is priced at $31.60. If you had held STK before it went ex-dividend in December 2023, that 5.85% yield would actually have become 6.7% because of the 27-cent special dividend. By the way, if you're new to the channel, I retired in 2017, and that's when I got serious about researching my investments in much greater depth because now they pay for everything. I mostly focus on stocks and funds paying consistent yields of 8% or sometimes more. At just 6.7%, this one fell short of 8% in 2023, but the total return was almost 50%, so I'll forgive it. I did a full breakdown in this review, but here's the short version. STK is a closed-end fund that extracts income from tech stocks by distributing stock dividends. There aren't many of those, it's mostly tech stocks. Covered call option premiums, which means selling the rights to some of the upside of the portfolio in exchange for immediate option income. And thirdly, capital gains, good old-fashioned buying low and then selling high. I explained closed-end funds in previous videos, including this one about UTG. The key differentiator is that unlike ETFs, they can trade above or below their net asset value. This is important when it comes to pricing, which we'll get to shortly. The tech stocks in STK's portfolio are highly concentrated on, and these are in order of weighting, semiconductors, or in the case of Lam Research, semiconductor equipment, software, and hardware. Beyond that, STK is also more concentrated in specific companies than the NASDAQ or even the NASDAQ 100. There are only 62 stocks in the fund currently, and almost half the fund is weighted towards its top 10 holdings, so it's worth making sure you're on board with those 10. Plenty of familiar tech names in there, but what about the 8th largest holding, Visa, the credit card company? Isn't that more of a financial company? What's that doing in there? Well, first of all, Visa has outperformed the S&P 500 by almost double over the past 10 years. So who really cares if it's finance or payment processing or technology? It's a killer stock, so good on STK for holding it. Visa was founded in 1958, so how does it compete with younger companies like Apple and Google? Well, one reason, and this is a bit of a tangent, but I think you'll find it interesting, profit margin. We might think Apple has good margins because their products are so expensive and they don't discount them. Apple's gross profit margin is 44%. Not bad. But Apple sells physical products, and those cost a lot of money to make. There are factories to staff and parts to buy and shipping to pay for. What's more profitable than making physical products? Software. Google's gross profit margin is 56%. better, but not exactly mind-blowing. What do you think Visa's gross profit margin is? In other words, revenue less cost of goods sold expressed as a percentage. 60%, 70%. It's 97.75%. It costs Visa almost nothing to produce its product. Now, of course, they have offices and staff and other overheads, so their earnings before interest, tax, depreciation, and amortization is only 70%. Not such a boring old company after all. Before I address a couple of things to be aware of for STK, a lot of the research for this video came from articles like this one. There were 7 articles written about STK on Seeking Alpha during 2023, which is way more analysis than I can find, well, anywhere else. I don't buy a stock or a fund without first checking it on Seeking Alpha. If you like doing your own research, I'll include a link to the recent Is It a Buy article, which I think gives a balanced overview of STK, and I'll include a link to access current Seeking Alpha promotions. The first thing to be aware of is that this is a closed-end fund, and CEFs typically charge higher fees than ETFs. The fee is 1.13%, which is in the normal range for an actively managed closed-end fund. Now, to justify a fee that high, the portfolio managers need to add a lot of value, and these 6 managers have clearly done that, so I'm okay with it. The second thing to be aware of is the price volatility. The 46.25 cent distribution is consistent, but this is a tech fund, so it will take a much bigger hit than the S&P 500 during a down market. If we look at the most recent bear market year, 2022, STK was right down there with the NASDAQ 100, so you have to be okay with that bumpy ride to hold these tech funds. STK isn't cheap as I record this, but that may change by the time you watch this video. If you want to own it, don't make the mistake that I made in 2023. I'll get to that mistake in a minute, but if you're wondering what I mean by cheap, closed-end funds trade at a market price that's independent of their asset value. So I'm defining cheap as less than its historical price premium to net asset value, or NAV. On CEFConnect, we can see that over the past 12 months, STK has traded at an average premium of 6.9% above its NAV. As I record this, the price is higher than that average, a premium of just over 9%. And that's what I mean by not cheap. CEFConnect is an excellent resource for all closed-end funds, and it's free. I'll include a link in the description. Now, on to my mistake. In June 2023, I said I was waiting for a better price to buy it, and then I got distracted and I forgot about it. Meanwhile, late October 2023 was the best opportunity since the bear market of 2022 to pick it up at a premium to NAV of almost 0. So I missed out. The point I want to make about pricing is that if you like this fund, either put it on a watch list or place a limit order. I created a watch list on my Snowball Dividend tracker so that I won't forget about it. I clicked on this star and then add a new watch list. In the June video, I said that I wanted to buy STK at or below $28. So I added a note to remind me of that. Over time, I'll add other stocks and funds to this watch list. Snowball's cheapest plan includes 2 watch lists, but I think 1 is enough for me. If you don't have a dividend tracker, this video compares my 2 favorites, and there's a link in the description for a discount off the price of Snowball. I think the portfolio managers at STK earn their fees and should probably get some more coverage from the financial media. The yield is currently less than the 8% I typically look for, but the special distributions and the price appreciation make up for it. So if you're an income investor, maybe you're retired and you want some income from your tech growth fund, STK might be one to put on your watch list too. If you'd like to learn more about STK and how it's been able to beat the indexes while paying a consistent distribution, this video is a full review and it explains how the fund works and the pros and cons. That wraps it up for this STK update. More armchair income coming soon.